Hey everyone, welcome in to another daily editorial here on the KE Report. I'm chatting with Jordan Roy-Byrne, founder and editor of the Daily Gold. Jordan and I are going to focus on the precious metals sector, mostly on the stocks and the ETFs that have the stocks, well, inside those ETFs. Jordan, you and I have been talking off mic, and quite frankly, the precious metals sector has been and continues to be over the last about 2 months fairly boring. Gold, silver, both are quite range bound. GDX, GDXJ are range bound as well. But when you look at the GDX and GDXJ charts, I have the weekly charts of both. These are, at least this week, making a run a bit higher. They're not at recent highs from back in, let's say, the very beginning of August, but they are showing at least a little bit of strength, trading in the higher part of the range. However, when I look at my portfolio and when I look at the wide range of stocks, juniors especially, that I have on just a general watch list, I've noticed that these juniors, in a broad sense, are really lagging. And one thing that's really standing out to me is that these lower quality juniors, I have about a handful of them that I just follow loosely just because I'm curious. I use them to judge general sentiment into the metals market. I've noticed that these lower quality juniors have really faded off some of their highs. Some of the recent numbers that I saw, stocks that were at 15 cents back down to, let's say, 8.5 cents. Other stocks that had bounced to 50 cents, they're back to in the mid 30s. So I've noticed that general weakness in the juniors. The ETFs aren't showing the same weakness, but I don't know. To me, it's not the best sign, or at least it shows a little lack of sentiment towards chasing some of these lower quality stocks. Can you give us a little idea of what you're seeing in these markets when it comes to the metal stocks?
It's a very good observation on your part. Now, from the bigger picture, GDX and GDXJ, those contain the largest, most liquid names. Even GDXJ, gentleman Bob Hoy, who writes a great newsletter, he called GDXJ the senior juniors. So when you're talking about juniors, you really, at least when you and I are talking about juniors, we're referring to smaller companies and not the ones in GDXJ that Bob termed the senior juniors. So those are more larger liquid. And yeah, I mean, if you look at the charts, they've definitely perked up this week. One thing I note, and it goes to your point, GDX, the advanced decline line, that's something we haven't talked about for a couple months. That's diverging negatively. So the advanced decline line in GDX has been really weak compared to the price action in GDX, which looks a lot better as we're speaking after the last couple of days of gains. But so even with respect to GDX, the participation is not there, and it's being pushed up by a fewer number of stocks than usually you like to see. And so that's one concern. And in addition to that, as you mentioned, the juniors, the ones that you and I follow, they really haven't confirmed the strength of the last couple of days or of this week. We're speaking on Wednesday. Monday was that better than a pretty good day where we saw the miners gap up and then they continued to rise. I don't know, they're up 4% or so. I remember looking at my screen and the stocks that I own, and it wasn't really that good performance. It was, my portfolio, I think, was only up 2.5% or so, whereas GDX and GDXJ were up 4% plus. And just looking at the candles on everything that I look at, they were pretty weak. Like, I'd call it weak strength. So we're not seeing that much underlying strength right now, even though the metals have held up. The ETFs look a little bit better on a short-term time frame. But to comment on your last point about, some of these junior stocks can correct quite a bit. I think this is something we touched on last week where, I mean, when the sector is in an impulsive advance, it's moving higher, it's in a clear up leg, sentiment obviously gets more and more bullish. People move lower down the food chain to more speculative names. And also when that happens, some of these smaller junior stocks, perhaps the lower quality, as you say, in many aspects, they can be pushed up by less sophisticated buyers. And when we see the sector cool off or correct, as it's sort of doing now, those buyers, they disappear because they tend to buy strength and chase momentum, which can work. But when the sector goes sideways or corrects, momentum comes off, those buyers disappear from the market. And so that affects a lot of juniors during a correction, if the sector corrects 20% or 25, those juniors can correct 35, even 40% because they don't have the institutional buying power or the, call it the smart money sector insiders that buy something on the dips. So that's kind of how I see it right now.
Yeah, you know what? It makes sense to me, at least right now, that some of the majors, the actual miners, are doing better because this looks like it's going to be a very good quarter for these stocks. The precious metals prices, gold, silver, even though they've moved sideways for the last month, they were breaking out, skyrocketing at the beginning of this quarter. So their numbers should be pretty good. Do you think it is the smart money getting in a little bit early before earnings season hits, saying that, look, these companies, they should be exceeding their projections, any revenue projections from earlier this year, because we have substantially higher gold and even silver prices?
And if we, because I use the term smart money, I mean, a better term for it may be professionals, so to speak. And I would say, they tend to buy weakness and buy on the dip. So I think they're, with the seniors holding up better, it could be the professionals looking to accumulate, or not looking to, but accumulating positions and buying on weakness. Maybe the professionals that several months ago, they weren't in as heavy as they'd like to be, and professionals that missed that first leg higher after the COVID low in March, they're the ones probably buying on weakness. And again, for a lot of juniors, they don't have these guys buying their stocks for a multitude of reasons. And with respect to financials, let's keep in mind that the market is a discounting mechanism. So I think in most cases, earnings reports are already priced into these stocks. Now on occasionally here and there can be a situation where a company reports something that wasn't expected, or they say something that wasn't expected that bodes even more bullish for the future. I mean, that's what you can get out of earnings reports. But for the most part, the market action in these stocks has already discounted these strong results to come. And, now the stocks are looking forward to what's going to happen at the end of the year, and increasingly what's going to happen next year.
So, Jordan, what do you think could be a big driver here? Because really it sounds like we need, some more retail money coming into the sector, which usually does trickle down to some of these smaller stocks, some of the juniors, whether they're high quality or some of the lower quality ones. The institutional money, it does seem like there has been a pickup in interest in institutional money in the sector broadly throughout this year. I've heard of inflows into these ETFs and into some of the majors, but it's more these investors that are going to start chasing some of these juniors again. What's that going to take?
My cop-out answer would just be time. I'll get to the fundamentals in a second, but look, we had this record 4-month move. And again, if you look at the 2008 to 2009 correction analog, that correction in GDX lasted 2 months. And in gold, it lasted 5 months, though it was very, very mild. So we're only at the beginning of the second month. I mean, we would need to correct in time another 3 weeks just to even match what happened 2008, 2009. And GDX, looking at GDX, I think only corrected 15 or 16%, whereas in 2008, 2009, it corrected 23%. So this correction really has more to go. Now, if I'm wrong about that, Corey, and the market strengthens and we see miners actually break to the upside and make new highs and keep moving, the downside to that, and this is very important for people to understand, the downside to that is whenever that run ends, it's going to lead to like a 6 to 9 month correction, sideways consolidation. This is something I talked about in a flash update to subscribers. I'm not predicting that. I'm just pointing out, look, if we're deviating off the 2008, 2009 rebound analog because we didn't correct that much in price or time and we keep running and making new highs in the, over the next month or so, yeah, I mean, that's great in the short term, but eventually that's going to lead to a sustained multi-month correction and consolidation. Now, you asked about fundamentals. I mean, one thing I'm looking at here is we're starting to see, I think in the last couple of weeks, gold and gold stocks, they're starting to regain outperformance against the stock market, and I always like to see that. So moving forward, we need to see if that continues or not. Honestly, I'm not a man of few words, but I am a little bit speechless in regards to what the next catalyst might be for a push higher. Recently we've seen rising inflation expectations. Before that, it was the aggressive rate cuts. So I'm not really sure. It would be something along those lines. But at the same time, if the markets push higher and we don't see real rates really drop that much, that could feed into my thinking that, if we get a push higher and a breakout sooner rather than later, that could eventually lead to a, multi-month correction and pullback in 2021. So, and I'm just laying out a possibility. I'm not sure either way what's going to happen. And I'm also not sure what the near-term fundamentals is as far as what's going to be the driver exactly. It's not going to be anything the Fed says today. I'm sorry, but they can't say anything that'll bring in a huge amount of new buying. I just don't see it. So we just have to wait and kind of see what happens. We need to see more evidence if the market's going to tell us, is it going to break out sooner, or is this correction going to last for another month or two? That's kind of what I'm waiting for. And I'm just, happy holding what I got. And, look, a lot of times to be a successful investor, you just have to do nothing. You have to wait and watch. And that's the mode we're in right now.
Yeah, it's a key point right there, is that sometimes don't let the day-to-day or even week-to-week noise shake you out of some of your better positions. But hey, I get what you're saying. A little bit more of a correction, even if it just is in a time sense. I think that could be good for the overall metal sector and help to support another run higher. But fact of the matter is, right now, it's been a fairly boring sector. Final comments here, though, Jordan. Have you noticed any correlation between moves in U.S. equity markets and moves in the underlying metal stocks? It's something I've noticed in the last couple of weeks, is that they're moving more hand in hand again. A good day for U.S. equity markets seems to be a good day for metal stocks. Bad day for metal stocks, too. Have you noticed any correlation here?
Yeah, I mean, it's interesting because we saw it looks like a sharper correction in the S&P at the beginning of the month. And if you look at, the S&P has more work to do to get back to its high. Whereas if you look at GDX, it's trading in the 43s right now. It's only $2.50 away from that. So, and as I said, we're seeing gold stocks strengthen against the S&P. So, yeah, I mean, bigger picture, they have kind of been trending in the same direction. But aside from looking at that, it's always important to watch the ratios, keep those in mind. And so that's what we want to see. We really want to see gold stocks outperforming the S&P 500. And I mean, in recent years, Corey, I mean, the issue was, yeah, they'd be going up at the same time, but GDX wasn't outperforming the stock market. The stock market was doing a lot better. But now we know we're in a real bull market, because even though they've both kind of been trending at the same time, GDX has been outperforming the S&P 500. So that's what I think we should focus on. And I think in the last couple of weeks, we've seen precious metals start to regain more strength against the stock market. And we'll see if that's going to continue or not. I mean, it would be interesting if the stock market had, more of a correction or failed to make a new high, and if precious metals continued to strengthen in nominal and relative terms, that would be a possibility, something to keep in mind. So there you go.
All right, Jordan, good chatting with you, buddy. I'm going to post a link to your website below. I recommend everyone checking it out, keeping up to date on some of the market fundamentals and technicals for the precious metals, as well as if they sign up for your newsletter, then they can see the stocks that you are following and the stocks that you like. Jordan, thanks for your time today, buddy. Have a great rest of your week.